Yeah, really well said. And that is one of the biggest challenges, right? Because typically the whole entity must move, meaning all
Mhm.
the investors must say yes. And some of them have different horizons and different needs for their money. When you guys go to sell, with carried interest or for deferring capital gains tax. And by the way, in our previous episode, we have a mini episode with Charles and I, and we talked about some of the struggles with the 1031 and some of the struggles with having a 1031 via a TIC
Mhm.
into the deals for him. But now I want to shift on the other side, Charles. So when you go to sell, what's the biggest frustration when you exit these assets? But perhaps you haven't
Mhm.
quite yet, and maybe you haven't because of the capital gains tax. But walk us through that strategy when it comes to capital gains tax deferral.
When you're working with investors, normally, it'd be great to be able to 1031 the properties into other assets, but you have to have, if it's not the plan from the beginning, it's kind of difficult to change that. If you have a smaller investor base, it's something that we've been going back and forth on for smaller holdings that we've been looking at, and possibly buying smaller portfolios and keeping some of them, and then also 1031ing them after the value add. But that's really the way that your investors can keep their money working for them, and obviously by avoiding the capital taxes. But it's also one of the things too is that once you've built that value in those properties, and these investors, most of them, right, want to reinvest back into other deals that you have. And it's something that we never from the beginning when we started syndicating properties really focus on. And I think it's something now that we have a lot more investors that are asking about. And I feel that probably within the next year, we will be setting up something, doing a project that will have the end goal is to 1031 the whole syndication to something else, and possibly, tell them that, hey, instead of 5 or 7 years, now we have something that's going to be 10 to 15 years all in, possibly refinancing out earlier into the second project.
Yeah, really well said. And that is one of the biggest challenges, right? Because typically the whole entity must move, meaning all
Mhm.
the investors must say yes. And some of them have different horizons and different needs for their money. And so to get everyone on board or to get someone to replace their
Yep.
spot or to try to TIC, it becomes a kind
Mhm.
of a real complex thing. So now there is a solution for that. And this is a little plug for the Deferred Sales Trust. You can now literally take each of the individual investors, if their portion was big enough, and do a Deferred Sales
Mhm.
Trust and or just the single GPs and their carried interest or their
Mhm.
portions, and they can do their own deferred sales trust, and the rest of them can pay their
Okay.
tax because you're not having to do a 1031, which is pretty sweet. We actually just did a deal in Georgia. It was a $7.6 million sale, and the gentleman sold 128 units, and he's a baby boomer and he's looking to retire, and he's like, I'm just tired of the toilet trash liability. I also don't want to overpay all by myself, not diversify, go into one property with all this debt. Instead, he got rid of all of his debt, moved his funds into the Deferred Sales Trust, deferred about 1.1 million in tax, and then he actually put a big chunk of that with Brian Burke and his
Okay.
multifamily fund, and then a big chunk of that with Joe Fairless and his multifamily fund, which is pretty sweet. So, for those who are listening, you can go to capitalgainstaxsolutions.com to learn more about that.